All right, welcome everybody. How we doing tonight? All right, can you see my screen and hear my voice? Just throw a quick Y up there for me. Let me know we're good. All right, no issues. People are rolling in. Give it a second to settle. Hope everybody's doing great tonight. Excited to be here. I'm actually a little nervous, man. Been doing this for a long time, but I still love it. Get excited. Feel some adrenaline. Feels good tonight. I'm on fire, by the way. All right, I'm going to share with you a little bit about myself, and I'm not going to spend a lot of time on that. Shit's boring. And then we'll just get into the charts, man. I got a great lesson tonight. I'm excited. It's stuff I've been talking about in the private group, but we'll absolutely spread the word. And I think it's going to make an impact on your trading immediately. Tonight, you can see a difference. That's how powerful it is. All right, the ticker's slowing down. Okay, starting to settle. All right, man, let's do it. This is Steve Mauro, Beat the Market Maker. Today is September 13th, 2023. Excited to be here for the open house. It is Wednesday. This is my session regularly, 7 p.m. Eastern time. Let's do it. All right, you guys know the CFTC stuff. Not going to waste time doing it. I want to welcome all my new students, my longtime students. Hope you got in. I saw Mohammed on the top of the screen. I don't know how that guy does it, man. Wakes himself up in the middle of the night, and he's the first one every time. Love to you, brother. All right, and my open house guests. So just to follow up with you, if you have any questions, contact support at Beat the Market Maker or hit me up on IG. A lot of people don't believe it's me. It is me on my Instagram, and that's why it sucks. I'm almost 60 years old. I'm 58 years old. You can believe I don't have a lot of time for that stuff, and I'm not interested in it. But it's a necessary evil in today's society. All right. So yes, it's me when you're chatting, text, all of it. It's me. All right. What goes on in here? Pretty much this. We get together. People pop some questions up in the chat. They send me their homework during the course of the week, their chart markups, and we go over them. Talk about setups that appeared, and we talk about new concepts and ideas as we're moving forward. All right, we look at student email and questions. You send stuff in, and I ask you, is it okay if I use this? And if you're embarrassed and you don't want me to, the answer is no, then that's the end of it. We talk about procedure, process, and strategies, different ways to handle what the dealers are throwing at us. And conditions have changed tremendously since 1999, believe me. We look at entries, exits, stops, money management, self-management, which is a big part of the business. And the older you get, you realize how important it is. It was an easy transition for me because I was on the fire department and I dealt with a lot of stress and self-management. You know, the joke was always like, how's it going to be if someone's having their worst day of their life, car accident, shooting, anything, and you roll up and you're freaking out? People are looking to you to be calm and keep yourself under control. So I had to learn how to do that for a lot of years. You know, there's a story I always tell, and I'm not going to get too carried away on stories, but talk about the first time I ever rolled up on a call. My first call was awful. I was at a place called East Lake Fire Station in Hillsborough County. There's a Steak and Shake on the corner. There used to be a big, huge mall behind it. And my first call banged out Harney Road, Hillsborough, traffic accident, motorcycle versus car. The dude got T-boned, leg fell off. And man, I was looking around. We got there. There was chaos on the scene. People were freaking out, screaming, crying. I got there. I go, shit, they better call somebody. This is bad. And I was like, well, wait. They called me. I got to do something. So that was my first experience with learning how to control your emotions and do your job. So literally, that was my very first experience. And I actually had to pick the leg up. It had a black boot and a white tube sock with red stripes on the top. And the captain made me do it. And he's like, pick that up, dude. I go, well, what do you mean pick that up? And he's like, we can't leave it here. He goes, they have to go to the hospital with him. So I literally picked up the calf and the boot and threw it in between on the stretcher where the guy's leg used to exist. So that's my story. I won't waste more time with that stuff, but it's crazy. And it's my first experience with self-management, and I don't know what the right word is, handling your business, keeping a straight face under pressure. I don't know, whatever it is, man. That was my first experience with it. Very first day on the job. Okay, so how I got here, 1999. I was a fireman. I wanted something else. I wanted more. I started trading, kind of sucked at it. And I had a friend, great guy, you guys know this, and he introduced me to a retiring market maker, and the rest is history, man. 2004, I met my now wife, Heidi. Some of you might know her as Heidi Closall. 2007, I started to teach her. We were hanging out for 3 years. We were busy making out. We weren't looking at no charts. 2007, I started teaching her about it. She wanted to learn about the business. She was excited. And that was the beginning of my teaching career. She's very easy to teach. She's very intelligent, smart, quick, all that stuff, sharp as a whip. So I started realizing, looking around, the internet was very early and nobody knew what I knew. I knew something special in the business, and I decided to go public. Some of you guys know about what happened at OTA. I started teaching over there, threw their textbook in the trash. They fired me, and I grew some popularity from that, and here I am, man. So look to the left, there's a copyright registration. I want you to see that. When I started teaching my wife, I wrote a book, like a book for her, like a how-to guide, laid it all out, and I actually printed it, I think, on dot matrix paper. Some of you know what that is, the older guys. Registered in 2007. So anybody tells you that I stole some shit or they taught me, they're full of it. I'm copyrighted since 2007. A lot of you weren't even born or you're in diapers. I mean, let's be fair. You young guys coming up, I'm almost 60. I'm more than double your age. And that's okay, man. You got to start somewhere. But there's a lot of people out there proclaiming that they're responsible for my success. And that's just absolutely not true. All right, I don't want to spend a lot of time on that. Let's get to it. All right, so we talk about self-management, and that goes with laying out your quarter. So what we do is we break the quarters down in 3 segments. This stuff is right out of the 12-week yearbook by Brian Moran. Love that guy. He helped me look at things a little different as far as time management. We do some journaling in here, and you guys know I hate that shit. I don't look outside and go, the sun's out today. That's not the kind of journaling I do. I just have 4 sections in my journal, and it's part of like the 5 facets of life or 4 core type stuff. It's just like looking after my body and my diet. As you get older, this shit becomes more important. When you're 20, it's the furthest thing from your mind. You wake up, you feel great every day. My relationship with my spouse, my children, people around me, work on that. Try to do something nice for my wife every single day, whether it's empty the dishwasher, fold up some towels, just some bullshit. Some of you know that I never let her pump gas. I always make sure the car is full. That makes any sense. It's just a little nice thing I could do for her, and I've been doing it for 20 years. Then I focus on some self-help and motivation. I'm a fan of Tony Robbins, Jim Rohn, old school stuff. Those guys are probably my age or a little older than me, and those are the guys I just grew up on. You guys find your own mentors, your own people to give you some kind of spiritual guidance or some kind of inner strength. So all this stuff is important, man. And then, of course, the main thing is to channel all this stuff into a successful business and focus on business. And that's what this is about. All right, we good? I see the ticker still moving. People questions. Don't ask me any questions right now. I'm ignoring it. I'll catch up with you. All right. Okay, so in spirit of marking up the time, where are we in the world right now? Okay, well, we know July's gone. We know August is gone. And I just told you today, September 13th, Wednesday. What are we looking at? Okay, we're about 2 weeks to the end of the quarter, and then we're going to be in quarter 4. So what is that? Where does that put you? It's 103 days from today till Christmas. It's a little more than one 90-day cycle, but that's it. If you're just starting out and you're just mapping out your rest of your year, you basically got 90 days because Thanksgiving's out of there. That week's trash, most families in America. And then you're getting into Christmas season, and that's a couple of weeks into New Year's. So you got about 90 days left in the year. It's not too late to roll up your sleeves and get started. In fact, it's proven, right, that most people get a little sense of urgency going into the end of the year and they start busting their ass. So now's the time to put some pressure on yourself. If you want to end the year strong and roll into January, now's the time. You're running out of daylight, man. It's time to get your shit together. All right, so we base all this stuff on this book, 12 weeks, how to get more done, blah, blah, blah. It's on Audible. I don't like to read. I'm busy, ain't got time for that shit. I'll put an audio book in when I'm maybe going for a walk, exercising, treadmill, something. And I usually run the books at about 1.25, 1.5 times playback. Depends on the reader, man. If the guy talks slow, ain't got time for that shit, 1.5. So if someone talks at my speed, you got to do it at 0.8. You got to do it 80%. But if someone talks normal, slow, I like I said, it drives me crazy. I speed that shit up, knock the book out in half the time. All right. And the other thing too is if we do it as a group, I like to do like timestamps. You just like easily on Audible, take a clip out of the book, and then you could ask me about it and I can go back and listen to it if I'm not familiar with what you're asking me about. And that's it. That's the study guide stuff. Okay. What I'm going to do tonight is I'm going to give you an actionable trade plan right now. If you're brand new, if you've been around for a while and struggling, get out a piece of paper and take some notes. We've had a lot of success with this. This is one of my primary trades. You guys know I like the M&W continuations. And then this trade, I've been talking about it for the last couple of months, showing examples, and we're going to do it again tonight. The problem is that I have, it drives me crazy, is that I put out something and then nobody says anything for a while. And then I'll get a couple of things like, I'm struggling with trading. What do I do? What's the problem? And you know, I always say this shit, and here it is for all the audience to hear. I have a digital footprint of you. I know how many hours you spent in the forum. I know what videos you watched specifically. I know what homework you submitted to me. I know what you say to Carr and Jim. Sorry, this is the way it works. So I know what you're doing. If you're not doing the work, you ain't gonna get shit out of the business, right? Art of war, every battle is won before you even start. So what does that mean? Your prep, your strategy, stop loss, money management, all the things that go with the trading business have to be done and known to you before you get in. What do you do when price moves against you drastically? What if you do if you're up 15, 20 pips and starts to come back? Do you scratch there? Do you scratch at +1? Money management. What do you do when you win? You're on a streak. How do you handle your lot sizes? Money management spreadsheet. These are the tools that we have in this group that have been around forever. It's not enough just to say, oh, I could take an M and a W. That's not the business. The business is handling yourself and handling your business. That's the business, right? I said business like 30 times. You put a trade on, it starts to go in your favor. You have to understand the market dynamics. Did it break the apex nadir? Did it retest it? Where's your stop go? After the retest, move out, breakout bar out of there, stop goes below that swing. Next level, pushes level 1. If you're holding for the entire ADR, where's the ADR at? Is it unrealistic? If you are struggling in this business, I'm talking to you directly right now. This shit doesn't resonate with you, just get off the line. You're wasting a seat. All right, the rules. This is my blue tracer trade. I love it. You buy or sell the tracer based on price behavior at the point of attack. The point of attack is the high of the day or low of the day from yesterday. We use buy limit orders and sell limit orders to make an entry because we know the level is going to hold. And I'm going to show you the dynamics from the book, and I'm going to show you what's going on. You use a market order so you can get a near zero fill. Call them zero entry trades, zero retest, ZRTs. You can get in sometimes right on the zero edge, man. I got filled this week at the very tip of a wick. And it was a split fill. I got aggregated in, but it doesn't matter. I got filled. Stop level is around 10 pips, depending on the pair. But if you have absolute zero book level and you're sitting in front of a bunch of stripes in the book, which is money, I'll show you what it looks like. You have it dead, man. You got those guys dead for the day. Now you have to manage your emotions and yourself and handle it. The target needs to be a fixed amount. It's not some random shit like, oh, today I feel like I'll go for 50, tomorrow I'll do 10. It's not how it works. If you're going to take a 20 or 30 pip target and you get a zero entry, we know that GBP's impulse legs are approximately 30, 35 pips. So if you're in, let's say you got in 5 off the high or low, okay, 30, let's just call it 35 minus 5, you're at 30, spread minus 1 or 2, 28, your target should be 25. It's not some, oh, I feel like 50 today. It's not how it works. If you're a trailing stop guy and you want to manage the trade, we use ketchup closes. I mean, there's a million different things out. Nothing beats a good old fashioned bottle of ketchup. You just follow that thing down. If you get one or two closes above or below the 13, opposite of your position, you get out. You got to keep your R values in line. That's why this stuff is important. What's R values? Risk to reward values. Take a 5R trade, 2R trade. You have to have a fixed stop. If your stop's going to be 10 pips, you need 20 or 30 take. 35 take, 3.5R, 25, 2.5R. 2.5R, you do the math, you plug it in the spreadsheet, follow the lot sizes. See you on the beach. Okay, Steve, I don't like fixed numbers. Okay, just use a technical target. What would be a technical target? Daily open, AR level, moving average, 50, right? You get a W off the low after a big drop. Where's the target? 50 or the 200 or both? Take some off at 50, hold for the 200. If the 50 is in consolidation at you, then use the 50 as an area to like flip the zone and go and aim for the 200. Right after a big drop, 3 days of drop, aim for the opposite tracer. If you get in on the low of the day blue tracer, then aim for the high side tracer. Point of control, EOD, end of day consolidation, but you're going to give some back because if they pull off the area, 25 to 30 pips, if you got 100 pips in the book, you're going to book 60 or 70. Makes sense? It's simple, but you got to have some rules. You can't just Wild West it out there, right? Okay, let's look at the book levels first so you understand what's going on, why these trades work. All right, here's a marked up chart, but I just got it for the stripes. Okay, this is Bookmap. This is the tool that an old student used to be in the group, Bruce, fantastic guy, turned me on to in 2014, where you could see the order flow as a heat map or in levels. Okay, don't buy this tool, just understand the patterns. If you want to buy it, but it's a whole nother learning curve and it'll drive you crazy, man. Okay, so here, this is, let's say this is the HOD, right? Here's your M formation, right? The dealer goes in, hits it again, slightly above this level. Run the stops, right? If you look at this hole right here, can everybody see my cursor? It's a little hard to see, but there's nothing I can do. It's a drawing pen. All right, getting a couple Y's, good enough. All right, man, so here's the deal. You had a little bleed right here, right? That's okay. That's where this is right here. So I call this level right here dealer insurance, kind of like playing cards. What happens is they'll put a level in the book and they'll put some black space. Black space is little to zero liquidity in the book. There's no order sitting here. And then what they'll do is they'll put it in, it starts getting absorbed, turns gray, they'll put it back, turns white, and the colors are updated. I'll show you the newer version. This is an older chart. Then it turns gray and it starts to run back up there and they'll block it and the wick will bleed through. So this would be the top of the candle body, right where that blue bubble went off, and then you would have some wick. That's what that looks like in your mind, right? Like a candle, picture that. Okay, that's rejection high, and they threw one block of orders right there. I call it capping. They cap off price to make sure it can't go, and if for some reason somebody surprises them with a big order for buy side, they ain't getting through that shit if their life depended on it. That's the entire system of banks blocking that level. Insurance, it ain't going through. So the dealers work in variations. They don't work in solid hard numbers. Like they want to do 24.5 to 24.75, they'll use a 25 pip range, or they want 24.5 by 24.60. They ain't getting above that, so they'll have insurance, a big, huge order block, and they'll get some bleed through in here, and it might drift and come back. That's why you get taken out on a wick or something when it runs up there. Because if it gets through this level clean, there's nothing stopping it, so the liquidity will suck it right up to there. That's why you get those wick candles. Wick candles aren't a bunch of order in the book, it's the lack of orders in the book, and the candle just sucks. That's what non-farm payroll is. I've showed video recordings in the group of crude oil releases. The book goes black. They pull all the orders except for like 50 pips higher or 50 cents lower, and they just withdraw the liquidity, and then the candle flashes and just eats everybody alive. The dealers collectively who trade crude oil pull the liquidity out of the book and it turns black. The whole book turns black 30 seconds, 40 seconds before the news release. And then it's just, sorry about your luck, man. All right. So we know that they're going to trap people here. We know the dealers are going to deal right here, right? Because this is their orders. When I move, you move. Where do I want to get in? I want to put a sell limit order at the very top of the candlestick. I don't know where this is going. I can make a guess. So I'm using this to give me an idea of where the limit order goes. Okay, how do I do that? Do you see how these little lines draw boxes? When I was using this tool, it was freaking crazy to watch it. It drove me crazy. I was losing my mind. Couldn't figure it out. One day, it was around 10, 11 in the morning, and I went to bed. And I left it running. And I usually shut my systems down so I get a fresh boot every day. But for some reason, I was tired. I was pissed off. This is back in 2014. I was looking at this shit. I was pissed off. I was like, God, this damn book, Bruce gave me a good tool, but I just don't know how to do anything with it. So I left it running, and at 5 o'clock, it resets and stops scrolling. And I hit the margin on the bottom of Bookmap and squished the whole chart together for the day. And then I saw it. It looked something like this. And I was like, holy shit, I see it. There's my patterns in the book. I just don't understand what was going on. Now I do. So here's what happened. I started looking at these levels, right? And I started realizing like this would be, let's just say this would be a microstructure M. This is the whole larger M, right? So I come over here and I see a line and I see flat prints right there and a line in the book. And I started realizing that all these people are drawing supply and demand zones, but they don't know exactly where they go or how they go. So I started looking at it and I said, I could draw a line like this, a big, huge top off the stripe. I could find some other areas where liquidity was, and I could draw it like this, and I could make a zone, ZRT, a zone retest area. And I could put an order sitting here waiting. This would be a sell limit order. And I could put my stop a couple of pips or ticks above this high side block that the dealers have in the book. And that's how the ZRT was born. Okay, so now what do you have? You have this big, massive M developing. You know it's coming to you. You don't chase that shit down here. You wait for it to come to you and you get a zero entry trade. Now, how does that in line with the blue tracer? The blue tracer is yesterday's high. A lot of times they will retest this area. So if we look over here in the past, we know that either they hit the high twice yesterday or once. Okay, well, they hit it 2 times over here or 3 times over here. So if they hit it, for argument's sake, they hit it 1 time or 2 times over here and 3 times over here, that's a 23 trade setting up. I never account for the 23 trade in my levels. I only trade 22s. So how do you know it's going to be a 22 or 23? I don't. That's why I only take 22s. I refine the entry off the level. So I take this, I use the bodies of the candle, right? I take this high side wick, I take this close here, and maybe this little piece right here and the top of that. And I will take these levels and stretch it out into the future. And I will create this zone that looks like this. My sell limit goes here. So what you have is essentially an M within an M. Right? Sometimes you could take this, understand that you're going to get the apex or nadir, and you need to look for another entry here. So you would take profit here and go here. And you could take these 2 trades and be done, or you can hang around for the big move. Okay, Steve, what if I come and the high of the day is already in? Okay, good point. Now, we look back in the book or at candlesticks. We come all the way back to the Asian range. This is where AR numbers come from. We take the Asian range, we extend the AR low out into the future. Sorry about my drawing. We take the AR mid, we draw it out into the future. We take the AR high. Okay, we got a bounce on the AR high, pullback, not good enough. But I can tell you what, I can get a micro M structure and I can get a refined entry off of this. I could take this high swing, tops of the candle bodies, and I could draw a zone out into the future. And I can go sell limit order right here with the anticipation that I'm going to get a secondary entry with about a 5 pip stop. You understand? That's a zero entry. What happens when you use a zero entry? Okay, take the spreadsheet, Plug in what happens when you change your stop to 5 pips, 10 pips, 7 pips, some workable number. Your lot size, if you're using a 30 pip stop, 7 into 30, 7 times 4, your lot size will increase by 4-fold. If you're using 10 lots, you just went to 40 lots. If you're using 5 lots, you just went to 20 lots. What does that do? Plug that shit in a spreadsheet and email me. That's what it does. It's a life changer, game changer. If you're at a prop firm, game changer. Okay, so now we understand the dynamics of the blue tracer, what we're looking at. All right, let's look. The question is, when I talked about this last time, people are like, I don't know how many blue tracer trades I'm going to get. This is a student submission from a while ago. I just pulled it up to show you what we're looking at on blue tracer. All right, how many interactions do you have with the blue tracer? You got 1, 2 in one day, right? You got 1 here. You got 1 here. This is a typical week, right? Where else? You got 1 here, 1 here. You got right coming out of Asia. You got an M formation right on it there. There's opportunity right here. You're looking at multiple pairs. There's a lot of interaction with the tracers. Okay, so how do we handle the tracer itself? Okay, there's 2 things. Looking at bigger trend, level 3 pushes, that type of stuff. We expect a level 3 breakout right into the stop run coming out of London. So if you don't see this, this is a short coming out of Asia. This is a higher time frame chart. You take the line, and there's several things that are going to happen. Yesterday in 6B, okay, I got this right here. I got a hammer. Price went up, didn't rotate, came back down and did a spinning top type thing and took off. Those were longs. If you get this rejection, you could refine that off of the pin, right, and the bottom of the body, and that would be your zone. You can go right on the tracer with a buy limit order, or if you feel like this wick was too long, you'll start nuancing it, I promise, start messing with it. You'll see you can maybe go a little bit into the wick, but you want to have the close of the body. The close of the body, right? We talk about all the time in the group how candlesticks taper. This is a one-sided taper, right? As you get away from the body of the candle, the order flow starts to taper. We know the candles are cut in half. You have offer and bid on the bar, and the spread is the difference between the two, each cell. There's cells on here like this, right? Order flow numbers are written in here. They're higher near the body and they taper off, and you get zeros on the bottom on the buy side or sell side, depending on the candle, and then they call those trap traders, right? You guys may or may not know that. You don't have to buy the tools. You have to understand what's going on. That's what happens on a hammer. You got trap traders at the wick, taper, very low, very hard to get filled, but the market's more liquid now than it was years ago, and a lot of times they'll give you a split fill and you aggregate over. They do it for you now. They don't want to pass up the business because they think you suck. They don't know you're going to win. They just take it. They're hoping you suck, right? Okay, we good? Let's look at some book stuff and then we'll look at some charts. I'm going the full distance tonight, so buckle up, get some popcorn. If I go over my normal time, my voice starts to hurt. I usually end in about 45 to an hour, but I'm going to get through my slides tonight. Okay, typical example of where the refined entry came from. All right, price is moving up. You got a flat print. Flat print's the high of the day, right? There's your nadir. How do we formulate an entry? Okay, we're going to take this orange stripe, which is the high of the day at the time. And if it was the high of the day yesterday, the tracer's running right through here, right? Okay, we're going to look at the tracer and we're going to anticipate that the dealer is going to test it on a reversal. Why do we think that? Okay, we look at the stuff that I've been talking about forever. Has he been rising for 3 days? Did he make an aggressive vertical move? When the market goes vertical, that's level 3, man. They use a news candle straight up and then they go into consolidation, whatever it is. When the market goes vertical, you're in L3. Okay. All right. So now what am I looking for? I'm going to come in here. I'm going to use these beautiful orange stripes. We use candlestick bodies. All right. And I'm going to say, all right, this is my hit right here. This is the high of the day. I'm going to take this. I'm going to get these tops of these bodies and I'm going to get the high swing and I'm going to stretch it out into the future. And you know, you could use the rectangle drawing tool. I suck at this with the mouse, man. Sorry. Okay. And then what are we looking at here? This is a 12, right? Do I know it's going to be a 12? I do not. I don't take it. I look at this, I refine the entry. I'm coming off of yesterday's high. I got something in the book that's telling me this is going to be the high swing. I got a vertical market. Averages are up. This is a gator all day, right? That's the VWAP, by the way, that average, and it's powerful, but it tracks almost identical to the 50 EMA. Imagine that. So you don't need a VWAP. All right. And then the VWAP, when price went vertical, the VWAP followed along quickly and then started averaging in again. So VWAP's over here. Okay. Now, what does this look like on a regular chart? Okay. Here we go. This is a sweet trade, easy. Okay. So look what we got here. We're in the Asian range. We spiked high and got an aggressive rejection right here. What does that mean? They're probably going to stay below. They don't want higher price, but we don't know that yet. So what do? Well, we got to box in this whole candle. When you have oversized wicks, you need to take the whole thing, but do not put an order at the half level. Try to front run it a little bit, maybe a third in. Okay, or just put your order right here on the tracer. The question is, since we know it wicked there before, they may wick it again and make a perfect double top or a slight variance. You have to take this bar and measure the distance to stop. Is it in your trade plan? Is it something you can do? Can you take the distance and be okay? If you cannot, then you wait for some type of close signal, right? Which would be immediately on the spinning top rejection that's inside the range. This thing rejects inside the range, right? It touches it and it closes below. So now we know that's our M right there. Open on this candle or sell limit in here. This trade was perfect. Look at all the leaning factors. You have yesterday's high, blue tracer, daily open, AR50, and a thing called point of control. That's the highest volume traded up to that point for the day. Right? Point of control is balancing the book, right? Consolidation. But it's important because that means there's a shit ton of orders there. They close below the point of control, the bias is down. They close above the point of control, the bias is up. But wait a minute, Steve, they close up over here. Yes, they did. That's why you got to learn how to read this shit. This is a high of the day move. Close below the point of control. That's a good entry, and this is a better entry. And if you took right on the tracer with a sell limit order, you were good for a maximum move of 52, but you can get out probably here or here for about 30. Easy. One impulse leg. All right, you notice this started right in the box, shadow box. Coming out of Asia, end of session, had an aggressive move, and they topped out going into London, and they finished it out. Moving averages pointing down, they're flat. What does flat mean? Flat means that this is coming from the other side of yesterday's tracer, right? We're here. So what happened? Price ran up like crazy, flat printed, stayed around the tracer. So this is either a 12 or a 22. How many times they hit the high yesterday? Got to go back and look. Was it 2? Then you got a 22 trade developing. Why? It's trading the high of the day right into all this liquidity in the book, and you're solid. All right? Okay. Another one. Perfect formation. Here's the tracer. Okay, you got a long candle spike. You do not chase this stuff. But you can anticipate that they're going to end the day or going to reverse off of this. So here we are, London, New York, news release, spikes into the low, pulls back, forms your W right there. You can refine the entry like that, or you can take this whole candle body and you look to execute. Tracer happens to be on the high side. Can you withstand the stop loss level from here to here? If you can, go buy limit order and let it play out. A secondary entry would be you box this up, you get the break above, pull back, and then you're looking for the refined entry on the second leg. You draw that in on the bodies, average the top, you go buy limit order right there. You take a measured move from here to here, here to here. There you go. Easy 20 pips, back into consolidation. That's talking about end of day, right? They ended high side here. They swung low. If you waited for this, you gave some back. If you use day open as a target, that's okay. Or AR50, that's okay too. All right, we good? We seeing this stuff clearly. Okay, blue tracer trade. This is sell side. Steve, why is this sell side? Because they just started a massive down run. This is coming out of L1, going into a big push into the low, right? You can see your 3 count. This is your vector candle into 3. Between sessions, the direction is already set for the day. If the tracer's in the middle and the direction is already moving based on moving averages, price is holding below the water or VWAP, then you need to be sell side. How do you go about doing that? Okay, we know this broke below, it took out this pin, and it pulled back, but did not take this out. So we have a failed buy side auction, but we have a completed sell side auction. Took that out. That means that they erased the levels in the book. They turned it black, the absorption. They pulled the levels out. They're going back. You could enter railroad track style, or you can put a buy stop right below, I'm sorry, a sell. It's not a sell limit order, it's a sell stop below the market. I don't like to trade like that. I would have took this back here, maybe took a railroad track close back below the catch up. Stop goes here. I like to try to get filled on a sell side. I want to get filled on the high side of the candle. On a buy side, I want to get filled on the low side of the candle. Make sense? And if you're looking for a late entry, here's your late entry. You got to get a completed buyer's auction, takes out the previous level back inside here. You refine the entry off of this pin because this is the last swing, right? It goes up, pulls down. You can get a buy limit order here and you don't get much rotation. You end right around back in the range. And if you start seeing this, it's getting late, take your money and call it a day. And if you had a fixed limit, this is not absolutely not a perfect measured move, but you take this measure from here to here, from here to here, and you get a rough estimate, and it's not close. You're gonna have to scratch it out or take it. All right, secondary bounce into the US session, end of day type stuff. Okay, price does all this stuff, comes back, rehits it, flat prints on it. You sell that. This could be the target, depending on how much it is. This could be the target. This was good. All the way to the low swing was 28. This was good for about 20. So here's the deal. Years ago, you had to have your own account. They used to offer you 1,000 to 1, 500 to 1 leverage. People are using prop firms now. So they're giving you access to 300, a million, $6 million in credit line, basically. You're renting the use of an account for $1,000 a month or $500 a month. You don't have to get a million pips anymore to make a significant amount of damage in the business. You need a $300,000 account? Can you make 10% a week, 10% a month, 20% a month? Of course you can. But you don't got to do it trading 100 lots on a $1,000 account. You have a little liberty. I know they have rules, but that's your problem. The rules bother you, that's in your head. You have to work within the confines of what they're offering you. I know one company just went down for doing the bullshit that they've been doing for 30 years, but you got to figure out how to maneuver yourself in their guidelines to get yourself where you need to be. A lot of you are struggling, can't put together a trading account. Can you afford the cheapest account on a monthly payment? Because you have to anticipate that it might take you a couple of times to pay and get through. But as soon as you get a check, it stops. There's a lot of guys using these types of things and are qualified within this group. Some of them managing several accounts, whatever the max. Each company has like 2 or 3 accounts maximum. They're trading, hitting their limit, jumping over to the next account, trading, hitting their limit, taking checks. That's how you're supposed to do it. I don't know if that makes sense to you. This is an easy setup that you can follow. So, okay, I showed you one pair. I like 6B. It's GBP or GU equivalent in the futures contract. You guys remember 2014, I got kicked out of FXCM. I got banned at ATC, and that was it for me. I had to find a different way to go about it, and I switched to futures, and I've had a really good experience with these guys. So if it's something that they have a minimum deposit, they're a little different, but you could do it in Forex, make enough money, and roll yourself into a different environment. I do not have the indicators for futures, so they're not available. So if you're digging my indicators and using the stuff, stay in Forex, find a good place to deal, find a prop firm or whatever it takes, save up enough money to be able to afford the cheapest account, roll that account, move up to the next one or get a second account, start pulling some money out, make a living for yourself. That's what it's all about. All right, a couple more charts. Same type of thing. All right, we had interaction right here. We had a nice push down, pull back. You can use a sell limit order. Stop would be above these bars to get the refined entry, right? Let me clear this up for you. Okay, you have a spike bar, comes back, and it continues short, right? So you can say this is a push, this is a push, this is a push, expecting a pullback. All right, well, they ate up 2 levels in one swipe. So we get about, what's the number, Mohammed? 50% pullback, right? Okay, looks like a clean 50% pullback. But what happens to be here? Okay, you have the point of control, yesterday's low. Hold on, I need a drink. All right, so now I want to refine the entry. I'm going to take this, I'm going to take this, and I'm going to stretch it out into the future. And I'm looking for a sell limit order here, and my stop is going to be 10, and it definitely goes above these wicks. You survive that, and there's your measured move. Take this from here to here, get a rough idea, take this from here to here, and that's your limit. The only thing I ever use fibs for, Mohammed, please, is to get an idea of what the measured move would be. I take my fib tool extension, go from here to here to here, and I project out 100%, and I'm looking for between 80 and 100% of where price will terminate. And if you sat through this shit right here, you probably got a little bit closer to the measured move. That's not my style. I want to be done going into the US session, start looking for some sleep. All right. This was a couple days ago in 6B. It's a beauty. Okay, we know that this is a 2M formation, right? But we know this tracer came from yesterday, so it's either a 12 or a 22. Simple. If you're trading on the tracer, you're setting yourself up for a 22 or a 12 or an 11, right? It could be a single hit and get the hell out of there. Okay, I want to refine the entry. I want to take tops of these bodies right here, and I want to stick it out into the future, just like if Bookmap was there. I want to go sell limit order right there, or if you want to see, this is the reason about using market orders. If you go market and you're waiting for it to show you something, that's a close above. That's scary, right? And then you're going to get in all the way down here and you're going to suffer some draw. If that makes you more comfortable than using a sell limit order, okay, whatever. You have to make sure that this stop number would be above out here in no man's land. And if it is, then you can handle the bleed. You don't always get bleed, but you got to be ready for it. And if they tap you out, I get tapped out by 1 pip sometimes, happens, 2 pips, right there. And then you look for a secondary entry. If they tap you out, you don't panic. You look, okay, where could I get in again? If you get the pullback, then you start trying to do some calculations. Take these bodies, top of the AR level. Maybe there's an open price. This won't work here, but if that was up there, that's a value area line. Look for something to lean on. Always need something to lean on. 200, right? Close below the 200. That's a pretty good place. Look for about a 1/3 pullback. Cars rules. There it is. You got an AR level, which happens to be a value area, 200 EMA, and you wick right into it. So if you got a shitty entry where you got tagged, there's your redemption trade. Okay, everybody seeing this? We good? All right. This is this trade broken down. This is how you would get in on this one. Okay, so you have your hammer inverted, got a little bit of bleed, comes back, hammers, you could open on this bar. You take a little bit of draw tops of the bodies, or you can wait for this, close back into the range, and then a wick here. So when you have the 15-minute chart, it looks a lot tougher to get in. But if you start breaking it down to smaller time frames and doing some math, right? If you close that hammer, your stop's going to be off the screen. 10 pip stop, right? If you use 10 pip stop, 20 pip take, 30 pip take, that's okay. This one offered up 57. If you took the first hit coming out of Asia, that's okay too. But these are better because you know what it's going to do. This is a huge M structure. He's looking for a way to get in, zero entry. All right, here's another example of, Steve, I don't see any blue tracer trades. And someone actually told me, I don't really see them. Okay, there's one. This is the tracer here, nothing here, one here, one here, one here, one here, one here. Oh shit, maybe there are some blue tracer trades. Trade this 4 pairs, 6 pairs, start monitoring for the tracers, set an alert. You'll end up with enough trades for the week to get your job done. And if you're trading off of a tracer, you're going to get a really nice rotation back into the range. And if you happen to notice, this is high side to low side. That's full ADR right there. Right? And if you went back long here, that's almost full ADR. That's enough pips to call it a week if you are so inclined to trade like that. You guys know me. If I have some shit on the board, I can't go to bed. I'm like looking at it, watching it, make sure it's being managed correctly, blah, 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 all that stuff. All right. Couple more charts. Okay, this was a homework submission, but this guy had this trade without even realizing it. Okay, so what did he have? He had 1. Now I want you to notice something too. You don't have book map, it's fine. I want you to notice when they start working near the high, you could literally take the previous day's high of the day and you could stretch it out and it pretty much draws the zone for you, right? This is right in line with SSDD. If they do the same shit on a different day and you can scroll back in history and look at it, you can use the tracers to form the zone for you. And that is the best zone you can possibly have because it's a turn bar, which costs millions of dollars for these guys to make that bar and to make this bar and to make this bar. A turn bar has to be a sudden abrupt halt in price moving straight up. How do they do that? They block the book. They throw a big orange stripe or a big white stripe solid right at the top. They cap it. Okay, they capped it here. They capped it here. They pushed down. They formed the nadir. They hit it again, right? Possible entries, right? I like real body closes, right? I don't care for the wick so much. I like real body closes. And that's one of the lessons we talk about is form a 1-hour chart. I don't know if you guys did the homework. Only a few people turned it in, of course. But Muhammad, I know you're on it. We have a 1-hour chart that we take the wicks off. We call them the same as the background, and we look at just real body closes. This is bleed. This is not where price is going. The body, the open and the close of the body is what matters. Right? You talk about, okay, so how do I know to sell this? Okay, failed buyer's option high side, comes back below. We take out this level in the book. Okay, where's the first place that shows me some type of rejection? Okay, the nearest place to this is right here. Draw a box on that. Refine the entry. You're leaning on an AR high side. You're below the 50. You're below the catch-up. Man, if you don't go sell limit order right here and put your stop above there, I failed you as an instructor, as a human being. That's free money, man, with zero draw. You're trading 10 lots right now with a 30 pip stop. How about this? Invert it. Trade 30 lots with a 10 pip stop. You just tripled your income. And you qualified for any prop account out there. twice on Sunday, without near as much stress as you've been putting yourself through. We're looking for zone flips and book flips. We're looking for areas where we know with a great deal of certainty the dealer's holding the level. This is one of them, the tracer. This is one of them, the tracer. Take the randomness out of your locations, your trade locations. Buy and sell the tracers based on behavior. Here's a tracer. Steve, I don't know what it's going to do. It's going to do one of two things. It's going to reject it or it's going to roll it. What do I mean? It's going to break through and tap back into. Here's a perfect railroad track entry continuation. I don't know what it went for. It's not my chart. And I don't look at Euro GBP. That's all it can do. It's not some mystery. Oh shit, what are they going to do when they get to the tracer? They're going to do this, right? Or they're going to do this, right? And W. Or what else? They're going to do a reversal, continuation, down, or they're going to come up to it, reject it, and drop. That's it. If you can't handle those 4 patterns, I can't help you. Don't sign up. Because that's the entire business, all of it. All right, let's look. What am I talking about? Okay, any level that you're trading needs to be auctioned. What is an auction? This is Auction Theory, by the most boring book I've read in my life, but I read every page of it. And I hated it the whole time. I was bitching and moaning. My wife's like, quit reading it. I go, no, I got to read it. Books by Standall. It's about auction theory, but it's about order flow and the tools that are available to us now. Since 2014, I've had this tool. So what did I have to do? I had to up my game, man. Switched over to futures. Order flow is available in futures. It's not available in currency because there's no centralized exchange. Okay, so now understanding auction theory, right? This is a completed seller's auction because it took out the previous swing. The dealer pulls back. Where's he going to pull back, Steve? Well, I got a wick rejection right here, and I have this wick rejection over here. These two coming off the swing low and the previous swing create some type of zone. I also have a 50 EMA and a 13 and an AR level that we've been talking about since the beginning of time. Written in a book since 2007, copyrighted down in Texas. All right, that becomes your secondary M. So you want to get a surefire lock. This happens to be tracer. It's pretty good, but if you miss this, you come in here, look for the nadir, and you trade the secondary M formation, and you get a 0 draw entry with a tight stop of about 10 pips, and the whole ADR is in front of you. You trade tracer to tracer. If you can't see that, I can't help you. All right, a couple more charts. Outside vector to the low, right? Coming out of London, we're in session, vector to the low, rejection, drop down on a 5-minute, look for a clean entry. How do you know it's going to work? You got this high swing, this fails on the sell side and lands on the AR level. Okay, if you had a completed auction below here that stays below, then that's the play. If you went long, take targets here or here always. Why? Well, look at this. You got a 50 EMA, you got ketchup right there, and you got an AR 50 level. This is a failed buyer's auction because it couldn't even take out that level. It doesn't become valid till it fails on the sell side and takes out this level. When this level takes out this level, higher prices anticipated, but we're getting late in the day. We're in the red box. Okay, they take out the liquidity in the book. All right, it's been an hour and my throat's hurting. I'm going to speed up a little bit. All right, I'm going to stick it out. Let me grab water. Hold on. All right, we're good. Okay, same type of stuff, man. This started in the day changeover. Went right down through a pin hammer. You can enter right there, right on the tracer. If you put a sell limit order on the tracer after it rolled up like that, you're looking at 3, 2, 1 into the lows. This is Asia. If you miss this entry, you come off the apex and you draw a stripe in the book. You draw your box. There's 1, 2, secondary W, master W, anchor low, secondary W, anchor, gone. Tracer to tracer, coast to coast, whatever you want to call it. This is a 15-minute chart, by the way, but it's there. So how do you handle this? Okay, you have your anchor low, right? Coming at it out of Asia. How do you know, Steve? That's the tracer. Changeover. How many bars getting into London? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, call it 12, divided by 4 15-minute bars in an hour. How many hours is that? Do the math, even if you didn't put it on here. Okay, this looks like a good anchor. They came off of a hammer off the tracer. TDI is in my favor. I'm looking for a secondary entry. This bar closes above this flat print. We use this flat print to come up with some type of zone. We use the tops of these wicks, these bodies, and across this flat print. That's the exact way you need to draw it, because that's what the book did to create this. The book squeezed the price right there and capped the price right there. So if the book does that shit, you want to get these, include them, and you want to get this high swing and stretch it out into the future. There's one, buy limit order right there, front of the box, stop down here, call it a day. I'll see you in Palm Beach. All right, again, here we go. Price is trading below the tracer. Comes above the tracer, rejects it clean. I want to take these bodies and I want to make my zone out here. If I didn't get this one, and I want to look for a retest into the area off of the book, I missed the tracer. You're either going to take it here or pass. But obviously, moving averages are pointing up. We're trading above the tracer, right? We got above the tracer. We're looking for a retest long. And if you miss it, and here's the other one. What's the difference in this? We don't really like to execute trades unless you get them right out of Asia until you're on the London side of the gap time box. That is a fact. London side of the gap time box. All right. And then you would use that double bottom theory, looking at wicks, stretch it out, looking at, there's a body close there, body close here. There's the wick bleed onto the tracer. You would form the box based on that. You start drawing these, it comes easy, man. Then you got a completed buy side auction, taking out this level, to pull back here, that's a valid entry too. Try to take a measured move from here to here, project it forward from here to somewhere around here. That's it. Okay, I think this is my last chart. All right, so here's the tracer deal, right? What's the trend? Think about something. First of all, I talked about this in the group last week. What day is it? Anybody know what day it is? If you don't know this shit, quick, come on. What day is it? What day is this right now? Tell me. Everybody. Monday. How the hell do you know? Double tracer. Friday, Sunday, Monday. Okay, what's going on here? Trend is what? Below the water, below the 200, pointing down. Okay, price closes below all these averages, including the blueberry. What do we got? We're looking for a retest into the high. There's a hammer. There's yesterday's tracer. Box this in. Box this whole thing in. Looking for a sell, and it happens to be right on the water. And then it's lights out, right? You can target this tracer. If you didn't get it, then you're going to come over here and you're going to sell a hammer below, retest into. Sell limit order. Sell limit order right there after you get the rejection and close below the tracer, and it pushes below. Completed seller's auction, took out the level, right? Flat print, sell limit order, stop out here somewhere, and there you go. That's a good entry. Everybody see that? It's clean, it's easy, right? So you have a massive M, then you have a micro M that happens to fall in line. If you miss this, the next place is sell the tracer. Why am I selling the tracer, Steve? Why aren't I taking a rejection? First of all, every single bar is red. All the averages are pointing down. You're trading below this. It's early in the week, right? Big move, false move into the lows, come back up and then do some other stuff. They might interact with this tracer again and give you another shot at the title. Not my chart. Everybody seeing this stuff? All right, take a couple minutes, scroll through the questions. See if I can't help somebody, ask some stuff. And listen, I know you guys are excited. Car's on tomorrow night, 7 o'clock. This stuff's all going to be on YouTube, my channel, Real BTMM, Real Me, whatever the hell it is. If you have any questions, just write to support, man. support@beatthemarketmaker.com. All right, let me look through the chat. I'm going to mute the microphone for a second, scroll through here and see if I can help some people out. Okay, the good question. How do we anticipate the pullback? Okay, well, you can't until there's some clue. So what happens is in futures, a lot of time you get even money. It's kind of cool. So I'm using this level to draw on. The body will be here like this. You'll have a little bit of a bleed. Okay, and then price will go down and form a V. I call it a finger roll. It's a V or an A frame on the smaller structures, right? Like this would be a V, right? And you're looking at the high swing. The nearest high swing is here. Here's the underside tops of the bodies. That's a perfect zone. Make sense? Do you see it? Where am I coming up with that? Let me go back in time here. Okay, look. Let me erase this. This is the stuff that's important. When they're going long, they roll it this way. When they're going long, they roll it this way. That's an A frame, right? That's an A. When they're going short, they V. When they're going short, they V. Okay, so now, looking at these levels in the book, this is actionable and easy. You're looking at tops of the bodies and wicks, but this is a very small microstructure. This is not, you need to use candlesticks for this. This is the only instance where candles will work. Okay, we know that there's turn bars here, there's turn bars here, and there's turn bars here, right? You can't sell this. Why? You can if you look at this microstructure, but it's not a big enough move. I want to see a close below the entire consolidation zone, right? So I could take the consolidation zone and stretch it out to some point in the future using these previous book mapped levels where liquidity existed in the book. So now what do I need? I need a push, pull back, push, close below a completed seller's auction. And then I'm looking for the last place the dealers tried to go long or buy the book, right? If the dealers push down and they're met with force by other dealers or more powerful dealers, they drive price back up. Then what happens is they'll cap the price somewhere in this level. It'll look like this. See the holes right here? Price will come through the holes and then cap right there. Then they'll go down a little further, get through this level, take out this swing low, and then this level will hold. This is the first place or the last place where buyers tried to get the book and couldn't. It could be retail traders, smaller banks thinking they're smarter than everybody else, whatever. But this is the last place the dealers tried to go long or tried to take over the book, whatever, market forces, whatever the hell you want to call it. So now I know this is the last place where the sellers capped it and said, not happening, dudes. So if I know this is the last place where it got capped, I want to use the bodies and form some type of aggregate box, no greater than 10 pips, by the way. Depends on the pair, but in futures, it's about a 10 pip box. And I want to make sure that I have a limit order that allows my stop to be above the box. So let's say I want to get in maybe front of the box, top 1/3, half of the box. I never go above half of the box. I don't take back of the boxes unless they're like a line, like so small it's insignificant. Okay, and then you put a sell limit order right here and you'll get a V pattern in and gone. And then how do you know the trade's going to work out without panicking? You don't until they clear this level. This means they completed a sell side auction and they want lower price. Make sense? If you look at this, it closed evens. That's not a completed auction. Auction's got to close below. This closed below VWAP, which is 50 EMA, and it closed below these, this flat print right here. Start looking at flat prints. Start looking at flat prints, consolidation, then look for the move. There's only 2 plays on consolidation, and they'll be yours for the rest of your life, man. Box these out, right? Box this out. Now, what's the play? Break below, pull back. Break above, pull back higher. Lower price. Consolidation. This is a very micro structure, right? So if you're looking at Asian ranges, you take this entire consolidation zone, like I told you earlier. This is Asian range, projected out, right? Now you're looking for a break below the AR level, right? AR 0, and then some type of thing. Steve, it missed the box. I didn't get it. Okay, well, what the hell were you doing? You didn't refine your entry. You take the first pin rejection, and that's where the idea is that they're gonna hold here. Why? Because they drop the shit out of it means they're selling. When buyers come in, see the green dots, buyers step in. Small dots mean small activity. When they push back up and the seller's like, screw you, right there. They cap you. Now we know they're capped. Okay, so I can use the bodies, aggregate, and create some type of zone into the future, and lo and behold, they close below and they tap back into, I'm selling here. If I miss, I got one more shot right there at the front of the box, and then call me later. It's over. Does that make sense? Yeah, you can get ID setups, yes. You can mix this with concepts, but the idea is I want you to tighten up your stops and I want you to tighten up your entries. Because like I told you earlier, right? You could trade 10 lots with a 30 pip stop, or you could trade 30 lots with a 10 pip stop. Which creates more R? Return on your money, man. Return on your equity. All right, man. It's 8:07. You guys can hear I'm losing my voice, man. I love this stuff. I've been at it for a long time. All right, I think I'm coming up on my 24th year. I've been at this 23 years, longer than most of you have been alive. I love it. I have the same excitement about it since I started. Actually, more so because it's getting easier. It's exciting, right? They got new tools out. I was drawing this shit and trying to figure it all out on MT4. I was actually on a platform called FX Solutions. Some of you might remember it's a long time ago. Interbank FX. They had some platform that had like flags on it, like you're trading the US flag against the GBP. They had the two flags and you pick the flag you want. Click on the flag. Me and my wife are on those platforms. Crazy stuff. Order flow was like $10,000 a week to have it in your house. You had to be on the floor. Couldn't even get it. Didn't have enough Wi-Fi bandwidth to get the order flow. Now it's on a standard internet connection. Crazy great stuff. All right, any more questions? Let me go to my last slide, I think. Is just info, talking about stuff. All right, there we go. Right here, it is. All right, if you want to find out more, there's the address. Write to my assistant. She'll answer your questions, whatever you need. All right, man, I'm gonna leave you with this. I wish you luck in your journey, but honestly, luck's got nothing to do with it. It's knowledge. Good night.